screen holder, Pratibha?
Visual.
You mean the background?
Yeah.
Let me just check.
Good evening, everyone. I'm just going to allow a couple of minutes for people to sign in before we officially start. Good evening, everyone. It's my pleasure to welcome each of you. I think it's been some time since we actually did a webinar. Brings a lot of COVID memories back, where we were actually doing every week some sort of a webinar, including how to use Zoom. That was one of the first webinars that we did. But we're really happy to have everyone in chat. We would love to hear where you're joining from. Please do share so that we have an idea where you're signing in from. If you're all in UAE and in different Emirates, tell us that. And if you're a Dubai resident, but in another place at this point, please do mention that so we get an idea of who all are here. And we've got a lot of questions as well already, and we'll try to go over it. But I'm super excited to, learn today from these experts. And I think what's also important is it's a founder running a business who's going to guide us through the experts. Um, that framing is important because what we want to do is really help on the ground. Knowledge is power. So this could guide you to, better ways of thinking. I'll talk a little bit about ties. If anybody, I'm not seeing any chats coming through. Do tell us, everyone, where you're signing in from. We would really love to know. So Thai, for those of you who don't know, is actually a not-for-profit organization that started in Silicon Valley more than 30 years back. And today it's 65, more than 65 chapters in over 15 countries. And we really help entrepreneurs. Fostering entrepreneurship is what we do. So Thai Dubai has been in the Middle East region for the last 24 years, working closely with Dubai Internet City, Infi. We run with the support of our partners, Horizon University College, Jas Pankaj, Tonic. And we really run multiple initiatives, which includes, Pratibha, we can actually move the slide so that the About Thai pops up. So Thai is built to really support the community and how you can follow us and keep yourself up to date with all the upcoming events. We run programs. We run a mentorship program where we help founders scale. We run a Thai um, women program, which I'll get to right after this. But really keeping yourself signed up to Thai Dubai. That's what we are on all social handles on LinkedIn, Instagram, YouTube, where your content will actually be visible even later. That's where you can catch the information. And then the seventh edition of our Thai Women is actually launched. Pratibha, we can move to the next slide. Um, I'm I'm remembering and proud to say Sophie was a finalist in our first edition in 2020, and it's amazing to see women founders across the years really do so well. We continue to support strongly that space. So if you know any women founder, make sure they apply. And this is a QR code that you can use. So do make sure. And I also want to really highlight the board and the charter members. That is the backbone of a chapter that is Thai Dubai. They are successful entrepreneurs who believe in giving back, being the mentors, being the guiding force. And that is really the success of the chapter. So to all the charter members who are here, thank you, and who continue to support even while they're not here right now. Pratibha, the next slide we can share this is our next event, how to scale consumer brands from the GCC. So this is going to be with founders who are building specifically consumer products, navigating the current supply chain and all those challenges. So I think we'll really talk about how to navigate. We'll have a set of founders in the consumer goods space. And keeping in touch with us is also through our WhatsApp community. So just really sign up and you'll be up to date on what's upcoming. And yeah, that's really it from my end. And uh, I would want Sophie to take it from here. Um, yeah, if we can have Sophie's introduction page. Yeah. Sophie, I think it would only be fair that I introduce you, and then you should say a few words about uh, your role and Napta Health. She's CEO of Napta Health, a leading women's health technology, and has been doing amazing fundamental things to build higher equity for women and healthcare, preventive healthcare for women. She's the best person who articulates it the best way. She's a founder who has enough grounding from the region to be able to be the moderator and guide everybody today. So, Sophie, do share, introduce yourself, and also take the session forward.
Well, thank you, Cicely, for the introduction and for having us today. So as Cicely said, my name is Sophie Smith. I'm the founder and CEO of Napta Health. We operate preventative care infrastructure for companies in West Asia and Africa with a focus on women's health. We were the first women's health technology company founded in the region, were in R&D, survived COVID, should have died probably at least 3 times with the sort of funding challenges and things that we've had along the way, but haven't. Resilience is part of our day-to-day risk mitigation, a big part of what we do, as I think is true of every founder. And so I'm delighted to be hosting the panel today with experts in the space. I will, in terms of the format of this session, very briefly introduce our 3 panelists, ask them to do a more extensive introduction of themselves and a brief one-liner positioning about why this is a relevant topic for them. We're then going to talk a little bit for founders about some kind of immediate risk and survival considerations during crises like the one we are experiencing and living and working through at the moment. We'll then speak a little bit about cash flow, funding, and financial strategies. And lastly, strategies under uncertainty. So how we transition to this as potentially a new normal, or at least to the understanding that things might continue in a kind of non-normal fashion for a while. We'll open the floor to joiners, participants in the panel for questions, and then I'll ask each of the panelists to give a brief, like your top thing for founders to think about from a risk mitigation perspective under the current climate. So turning to our panelists then, I'm delighted to welcome Sanjay Babur of Cosmos Insurance, Abhi Jalan of Clyde Co, and Saurabh Lodha of Wio Bank. Sanjay, would you like to give a quick introduction to yourself and explain why you're here today to talk about risk?
Well, good evening, ladies and gentlemen, and welcome to this webinar. I'm an insurance broker. I've been a broker for 30 plus years. I've also lived in Dubai for almost 50 years, so I've been there for a long time. I've seen all the crises that we've gone through. My focus is to help and guide you guys in terms of risk and insurance. And if you have any questions or queries regarding that, that's where I will come in. Thank you.
Super. Thanks, Sanjay. Abhi, are you up next? If we go through the slides.
Thank you, Sophie, and good evening, everyone. My name is Abhi Jalan. I've been a practicing lawyer since about last 33 years. I work with a law firm called Clyde Co, and I am here to share my experience with all of you about the risk mitigation in the current circumstances and what you could probably learn and adapt from what is going on in the moment.
Super, thanks, Abhi. And last but not least, Saurabh.
Thanks, Sophie. Good evening, everyone. Saurabh Lodha. I have worked in SME banking and payment space for past 25 odd years now, and largely spent the time in the region. Spent some time in UAE, in Saudi, and working across various banks and financial services companies. Most of the time has been spent on the SME banking space rather than retail banking. So seen through a number of crises and helped a lot of customers to navigate through all of them. And today my role will be to stay very practical and share what we see from banking side, how to identify early warnings, early stress signals. And maybe if there is a need, I can also go through how some banks are responding. Thank you so much.
Super, thanks, Saurabh. I'll just add a disclaimer up front that we are going to share our personal opinions as individuals and some of our experiences navigating this space. These are not necessarily representative of the opinions of the organizations that we represent, nor should they be considered advisory. If you do have questions about your business, then highly recommend that you get in touch with your own accounting, legal, and kind of logistical strategic advisory support as well. So thank you, panelists. We're going to start again, and hopefully this will be a very grounded and practical session, talking about some immediate kind of risk mitigation and survival mechanisms that can be enabled for going through the crisis now. So Sanjay, I'm going to start with you. This is a time when people start to think about insurance. Arguably, insurance should have been thought about prior to the onset of a crisis. But for the sake of the founders in the call, what are some of the common misconceptions that founders have about what is or is not covered by the various insurances available to them, particularly things relating to force majeure, supply chain disruption, cost inflation, etc.?
Well, first of all, the current situation is normally not covered in an insurance policy. The basic principles of insurance is to cover losses of few paid by many. But in the current situation, there would be losses of many paid by many. So it kind of defeats the whole purpose, which is why it's a standard exclusion across, I would say, majority of the policies. There are specialist policies available to cover the current situation, which are now being sold. Prior to this situation, it wasn't really something anybody was concerned about. for obvious reasons. It was primarily bought by hotels, malls, and other public places, but not usually by the general business. In terms of the supply chain, and what was the other thing you had mentioned, Sophie?
Supply chain disruption and anything around kind of cost inflation. So changes to contracts where you have prices stipulated, for example, and then suddenly people are trying to charge you things, different amounts.
Well, again, those are consequential losses, which also unfortunately are a standard exclusion in most insurance policies. On all
Okay, and
those three situations.
you mentioned that there are policies that are available now to support companies through the ongoing crisis, and these are things that companies can take. For people on the panel who are interested, how would they go about obtaining those?
Right. There is a product called political violence insurance, which covers the current situation, the debris falling onto your premises, and the consequential fire and so on damage that can occur to your property. At the present moment, it is prohibitively expensive. The prices reflect the current situation. The minimum premiums that we're looking at are around 25,000 US. So it's not really available to everybody. But having said that, it is something that a lot of businesses are considering at the present moment.
Okay, and Abby, if I come on to you, talking again a little bit about supply chain disruption, etc. What are you seeing in terms of contracts breaking down? How are they breaking down? Where are they breaking down most frequently? How should founders be thinking about force majeure in practice?
What we are seeing, Sophie, is at the moment, the common fault line seems to be in hardware, logistics, construction, manufacturing, food, energy sector, where there are missed delivery timelines and partial performance either on the quantity or quality shortfalls resulting from that, and often about the who bears the cost for the dispute which is arising. I think is in terms of it's often is not about the performance, but it is about can the performance be continued at the agreed price with the same speed or input? And the variation of that is what is causing most of the friction. In terms of force majeure, I think the easiest way to understand is that force majeure is not it's not a free get out of jail card. I think it's got to be people got to read what is written in the contract, and like insurance, think about it a bit in advance. I think before you could call upon force insurance, I think there are also provisions in the UAE law which are built upon the possibility where there is a complete failure and objective failure, which is completely beyond the control of the individual. There may be relief, but you got to keep in mind the cost of litigation itself, which probably is going to be more than the insurance policy that Sanjay earlier mentioned.
Okay, so just to break that down a little bit for companies, I guess, if you have a warehouse that is destroyed, for example, would that be a reason for you to call out force majeure?
Again, you have to, there are three tests to that. Is that, if the warehouse is destroyed, was the warehouse destroyed because it was completely outside your control? And does it lead to the impossibility of performance? If you can prove that to the court that, yes, the warehouse was destroyed because I could not have done anything that is in my control. And because of this, I cannot perform the contract. Then the parties, you have to rely on the UAE contractual, the civil transaction provisions to say, let's put parties back into the original provision and as if the contract never occurred, which means if you had any payments, which you got to refund all of that. Not a straightforward, easy answer to say yes, because it has been destroyed, you walk out of the contract tomorrow. No.
No, and take a slightly more complex situation. Let's say a warehouse is destroyed where you are storing your inventory. And so you're not the owner of the warehouse that is destroyed, but you are reliant on the storage of your inventory within it. And you have an order from a client say that you're then not able to deliver because your inventory has been destroyed. would that be a reason to call force majeure?
It could, unfortunately, I can only say it could help, but it's not a straightforward, again, a clear answer that yes, because it's owned by a third party, I can't fulfill my contract.
Okay, and for companies who are navigating these, again, probably a lot of confusion, a lot of uncertainty in terms of contract delivery, as you say, get out of jail cards, for advisory support or to kind of pick through some of this, what would you recommend? Who are some of the people that they could speak to?
I think it is my recommendation. It would be that it is first is to document all these conversations and the event as they experience that. So there is a record of what has actually happened, and then speak to the council and look at the contract, what the contract is saying actually. Is the contract providing them any relief, or if it is not providing, then is there any provision of law which can help them? And you got to then balance it with the cost benefit analysis of that.
Yeah, okay. Saurabh, I'm going to come to you now. Again, practically speaking, not talking about advisory at this point, but rather as a bank, some of the things that you do proactively to potentially observe early warning signs in businesses that are distressed or under stress from a cash flow perspective. What are the things that you do? What are some of the signals that companies can identify in themselves, and what can founders be doing before they reach that point?
See, early warning signals are primarily related to the cash flows. So specifically, we may have lending customers and non-lending customers. So wherever we have lending customers, there the monitoring of cash flows is a little bit more focused, and wherever we see some early stress signals, we reach out to those clients. And typically, this is very programmed across all the banks. So banks would typically reach out to the clients every quarter or something and understand what is happening with the customer and maybe file internal reports, call reports, etc. And same happens here, but with a lot higher frequency. And when we see cash flows, etc., are getting impacted, we do have some experience now from the pandemic times, where most of the banks did give out some sort of a delayed payment plan, supported the SMEs and companies with their financing, with their cash flows. So with the similar playbook, we are looking at the cash flows in the customers. And while at this stage, we have not seen any significant impact across most of our customers, but we are watching things, and wherever there is a need, we are extending help.
Okay, so I'm going to...
And parallelly, we also do things like some new lending products, or we collaborate with some government programs like Khalifa Fund, or there is a Mohammed bin Rashid Innovation Fund to come out with some new products which can help the customers.
I know we had a billion dirham stimulus package announced by the government recently for SMEs. And we've seen some of this start to play out in terms of discounts on trade license renewals, etc. Are you able to share any additional manifestations of this stimulus package that we might see, SMEs might expect in the coming weeks?
See, aside from stimulus package, which tends to be a little bit more focused on certain areas, we have, as it is, done a few things from our side already. During the time when cash deposit machines were down, we made all cash and check pickup free for all the customers. We are giving a 6 months free bank account for all the businesses who are applying for a bank account. We also waived off cash deposit fees at our Lulu exchange type places. Then something which is really unparalleled, not really a cash value, but we initiated a program called SME Spotlight, where our customers could come up with their stories on what they have done, how they've reinvented their business and putting it forward. And they can create a short video which we'll post on our app in the experiences section. So these are few innovations which we have done to help the customers and support the customers wherever there's a need. And as far as specific new founders and creators is concerned, we regularly come up with some offers where we give free banking to them. So all of these things combined really gives a good sort of a package to the clients and to save costs.
Okay, and if the experiences, the founder experience videos that you spoke about, are they only available in the Wio app, or can they be found elsewhere as well?
It is only available in Wio app for existing customers. I think it is there for non-customers as well. I'm not sure about this. I can check and come back to you on this, but
Yeah.
we put up all those videos, and it has
Okay.
been taken up very nicely with many of our clients.
Yeah, that would be great. If they are externally available and we can get a link to share with
Sure.
participants in the panel, that would be great.
Sure.
So I'm actually going to stay with you as we move to talking now about cash flow, funding, financial strategy, etc. Given delayed receivables and uncertain inflows, what are some conventional and unconventional ways that founders can stabilize cash flows right now?
See, I was talking about the playbook of pandemic. We have all experienced the uncertainty, and the uncertainty right now, while the background and the reason is very different, but the outcome is similar. There is a cash flow uncertainty, there's a future uncertainty. And within this, I think the best thing to do for everybody will be to build a rolling 3 to 4 month plan on the cash flow, weekly plan on the cash flows, and redo that every week. And when you're doing that, be brutally honest with yourself, and accordingly try to see what can be done. Whether you reduce your costs on some area, whether you fast track some of the receivables by following up with your customers, or you delay your delay your expenses a little bit. These are some of the traditional methods which everybody knows, and every founder, every businessman does on a day-to-day basis, and they know it more than me. But on the unconventional side, some of my customers have shared with me that create some new stuff, as in make some new packages, sell your future services now. So you can maybe make a 12-month package on a promise of a upfront revenue for yourself. Be very brutal on any outflowing cash, any new thing which you are planning to do. Do that only if it brings in immediate revenue. Otherwise, stick to your normal playbook and expenses which give you immediate cash. These are few things which some of my customers have shared with me, which I can share here. And of course, the bank debt can be used. Banks are definitely not closed, but do that only and only for cash generating activities. Don't put in good money after bad money. That's a message.
Yeah, very solid. Perhaps it would be helpful if I shared some of the things that we've done as well in the last 4 to 5 weeks as a company. So agreed 100% around discretionary spending. Anything that is non-essential has been paused, which obviously has an unfortunate downstream effect, but you have to protect your own business first. Any non-essential contracts that were due for renewal that are not evergreen, so don't automatically carry over, we have paused until June 1st. We've also looked, because our kind of hero product is an in-office annual health check, and obviously a lot of companies have switched to remote working. There's a lot less kind of footfall in spaces where people would typically go full stop. We've looked at some of the other aspects of the platform, specifically the digital aspects, our corporate dashboard, our app, and looked at ways that we can kind of fast forward some of the revenue generation associated with those, including outside of the UAE market. So in parts of the world that have potentially a lower risk profile at the current moment in time. But yeah, it's, stabilize what you can first. Stick to your kind of core product offerings as long as they're viable, and then anything around innovation or new stuff comes last and is added right at the top. Sanjay, can insurance play any role in protecting against rising costs or payment defaults, or is that a gap that founders need to pay for and plan for elsewhere?
Rising costs, no. Payment default, yes. There is a credit insurance product that's available in the market where we can cover protracted default, bankruptcy of your creditor, of your debtor as well. So that product is available. That's something that can be bought even today, where we can cover your outstandings. Also, normally when you present your balance sheet to a bank, the accounts receivable is just thrown out the window because it's an unsecured debt. When you wrap an insurance policy around it, banks do tend to give you some further credit on the back of that as well. So it has a double advantage.
Okay, and I know I know what you said about receivables being unsecured, but there are now companies that offer revenue-based financing and invoice financing to startups in the UAE. There is usually a minimum revenue threshold, somewhere between 100,000, 300,000 dirham per month, which can be a little bit of a high entry point, particularly for some new startups. But those vehicles are available. And in terms of kind of repayment, usually you get somewhere between a 3 to 6 month repayment window based on your credit history. Interest rates are reasonable again under the circumstances. So those facilities are available to companies in the UAE now. Abby, what practical? Oh, go on. Sorry, Sanjay.
Sorry, Sophie, I'd like to also add there recently there is a new product available. Typically, credit insurance is done on a portfolio level, covering all your debtors. Whereas now we have a new product available which is covering individual contracts. So you can cover an individual debtor specifically. So if you get something large, you're unsure, we can provide you with cover for just that particular contract.
Okay, amazing. So that's also good to know and something that's worth thinking about. Abby, what practical steps can founders take contractually to enforce payments or protect themselves from client non-performance in the current environment?
My suggestion would be that where they are faced with these situations, they need to have a dialogue with their customers or counterparty and have a reasonable, sensible discussions around that before trying to either take any drastic steps. Example of that, for oftentimes we have heard is that we hold a check, the drawer of the check is said, don't present the check. And if I don't, I'm damned. If I do, I'm damned. What do I do? I think the answer to that question is, to our mind, you got to present the check when it is there while the check is valid. But maybe you could have a discussion with the person who is issued it to say, okay, no, this is what we are, and that understanding has to be recorded in a right, nice manner where nobody gets unduly jittery about it. I think is, Sophie, in our experience is that, it's not the legal arguments that give rise to disputes. It is the lack of communication between the parties and where there is reason that stops taking place. I think practically, again, going forward, what people could do in these circumstances is to probably be more insistent on getting higher deposit before they provide any service, provide a clear payment plan where it's linked to the milestones, get higher advances, not rely so much on the credit side of it, and maybe shorter billing cycles. And I think those are the things which we suggest before getting into legal part of it. And on the legal, I think it's worth probably pointing out that yes, there are many options available, but they all come at a price. So sometimes the legal option may not justify it.
Yeah, I think the point you make around exploring other opportunities for dispute resolution first is a very good one. We are quite, I suppose, legalistic here in many ways. We don't necessarily have widespread and standardized tools for debt collection, for example. So in countries like the UK, if someone defaulted on a payment, that the standard procedure is to put that debt with a debt collector, who will then engage directly with the organization and will negotiate a payment plan, often very competitive, anywhere between 12 to sort of 60 months for repayment of that debt. But there's no reason why, as organizations, we can't agree these things between ourselves. If you have a payment that was due upfront as a single bank transfer or a single check, say, listen, we're fully committed to making this payment. We can't afford to right now. Would you either you have to wait however long the check's going to bounce, we're not going to be able to pay it for the next 2-3 months realistically, or we can give you 4 post-dated checks, each for a quarter of the stated amount, and you can cash them every month between now and the summer. And this way you get your money, you're guaranteed your money, and we also are able to actually make a payment. Otherwise, we would not be able to afford to make. So you can negotiate payment plans. And I do think that the community is in general much more open, even than they have historically been, to having these conversations, because we're all in the same boat.
I think, Sophie, you're right. I think the caution that I would point out is that, is oftentimes these conversations are had, but there is no record maintained of those conversations. And I think, one got to be very careful in terms of thinking through that, is it worth me having this conversation verbally, or is it better to have an email discussion on what should be the tone of the email? Because conversations will be forgotten.
Or have it verbally and then put it in writing, right?
Correct. So you got to be very careful around these discussions. So you are playing it safe, not unduly antagonizing your business partners, and explaining and to do what you want to achieve, which is exactly what you said. That should be the objective. How you go about it can make a big difference in this.
Okay, I see I'm just going to take a couple of the questions that are coming through the chat before they disappear. And Abby, we've got one for you, which is, could you please highlight some of the pros and cons of force majeure, those that impact the client and the contractor?
The pros, I think, is force majeure, if I could point out, I think, in our experience, practically, most people, when they read the contracts, force majeure is the provision that people skip. They don't read that provision because it's usually understood to be it's act of God beyond my control, and they skip the provision, which I think is, hopefully people would realize that that's the wrong approach in that, because force majeure is how the contract is written into it. You need to consider and you need to think about what is the force majeure in your particular circumstances. For example, if you are really dependent on a data center, you got to put in that, if my services from the data center stops, I can't perform my contract. You got to make it more tailored, because there is, I think, a tailor-based thoughtful process, and that is there is no substitute for a boiler. It cannot substitute any boilerplate on that. And you got to invest in that. So I think when it comes to what is the pros and cons on force majeure, I guess the question is, if what are the pros and cons of if you invoke a force majeure? I think invoking the force majeure is, the moment you invoke a force majeure, most likely your counterparty is going to say that, I'm sorry, that is not a force majeure. It is something that your inability to perform because of the circumstance, and that is in your control. So they are going to argue that it's not a force majeure. So you got to be very, very careful in terms of before you invoke it, and then remember that a dispute on that is going to be settled by the court, which itself is a long term process, and depending upon which law is a contract governed by. So answer to me, I think the question goes back to it is that, if you can try and resolve the dispute or the uncertainty or the disagreement by sensible business discussion before resorting to contract or lawyers.
Yeah, I guess there's the long-term relationship to think about as well. Ultimately, everyone here today is in the same situation. Most companies are being squeezed one way or another. And like most crises, this too shall pass, inshallah. and then we all have to go back to working together as normal. So, assuming that you want to maintain goodwill and a good long-term working relationship, whatever you can do to maintain your existing contracts, ideally you should do it. Sanjay, I can see that there's a question further up around the details of the policy you referenced previously on political risk. Can you share a little bit more detail about these types of policies? Are they available here? Are they underwritten in the UAE or outside of it?
Right. So it's called political violence insurance. It primarily covers terrorism and sabotage, war and civil war, riot strikes, and civil commotion. Now, uh, these products are normally, whilst they are available in the UAE, they are primarily reinsured abroad. In large majority, it is done by Lloyd's of London. Right. So that's what this product, it's effectively giving you the ability to buy back the standard exclusions in a normal policy, which all these items that I mentioned are not covered in a standard insurance policy.
Okay, thanks, Sanjay. I can see more questions coming through. We're actually going to move on to sort of segment 3, discussing strategy under uncertainty, and then I'll pull some of these additional questions in. Saurabh, perhaps I'll come to you. How are investors and financial institutions currently thinking about risk? Are they pulling back? Different categories of investor, family offices versus venture capital funds versus private equity, or are they just becoming more selective? What are you seeing in the market?
See, I think from banking perspective, we are definitely becoming more selective. As I mentioned earlier, banks are not shut; they will not be shut. The shop is open, but we would definitely tighten our risk appetite and look at certain higher vintage of customers for lending. We will look at will not be open to giving exposures to certain kinds of businesses which are highly impacted. But having said that, if there is a reason enough, the business which displays a specific amount of vintage and has gone through cycles and is well established with well forecasted cash flows, we would be open to funding them. That's a new funding. Existing funding, how we treat that, one of the questions I read was around deferral of mortgage loans. So it is one bank to bank. Each bank has got different ways how they treat deferral requests for the installments or the obligations. And you will have to approach your bank to see what are the possibilities. In COVID time, I think there was a very explicit, pronounced appetite of banks to give deferment on installments or the payments. And I think in the current times, the banks have already geared up for that, while it is not a very pronounced appetite for deferments and supporting the cash flows. But definitely there is a underlying undercurrent where these conversations can happen, can be started. As far as venture capital, as far as venture capital or private equity, etc., is concerned, I guess I'm not privy so much on that side. But what I would want to believe is that venture capital and family offices, they would rather fund proven business models rather than anything revolutionary. Yeah. So anything revolutionary or something which is just an idea which has potential to grow really big will have to wait for a bit of time before it can get funding. And I guess people who still believe that, yes, that idea can work will have to go through the friends and family route who believe in them and take some funding and buy some sort of a runway for themselves. But it is only the established and well-proven models will probably get funding at this stage.
Yeah, I think you're right. I think that we've made, one, this is still a relatively nascent venture capital ecosystem. If you look at sort of more established ecosystems in Silicon Valley or even Europe, for example, risk appetite in general, in terms of funding innovative things that have not been seen in any part of the world ever before, has always been lower. And overall risk appetite, I would say, is also lower if you look at the global market. So the current crisis is only going to have exacerbated that. I do think, second observation, that if you are a company that has been operating in the region for a while, especially if you have survived COVID and now you are here in the UAE, in the region, still showing up, still working, still being very present, still fundraising, there is an appetite among local investors, particularly family offices who are obviously vested in the long term in the region, to invest in those companies who are crisis proof and can prove not just once, twice even, that they have survived, pivoted, and come back stronger. So if you have been around for a while, and you are fundraising now, or you need working capital to support the business in the short term, I think there are family offices in particular that you can reach out to potentially for some financing who might not have necessarily been open to it before. So in every crisis there is an opportunity, and there will be people who see that opportunity. But at this point, probably looking for people who are really, really vested in the future of the region and its success, and know that it will come out stronger, the people that you should be speaking to. Abby, at what point does a founder need to rethink their business model versus trying to enforce existing contracts? You know, you can only flog a dead horse so much. At what point should founders be saying, okay, that's it, I just have to abandon this and move on to something new?
From my perspective, I think, I think if you have reached the conclusion that it is a dead horse, then I think it's a dead horse. I guess, but I think before you reach that conclusion, if it is just symptoms of few customers which you are having issues with, or is it a generally widely prevalent across everything that you do, mostly? And if you have reached the conclusion that if it is mostly and you are flagging a dead horse, then I think you got to consider, because if you are in the UAE, even bankruptcies are not, they have their own cost to it to implement that. And I think, that is what you should be, in your planning, you got to keep that in mind, that there has to be SAT reserve left out, because some of your employees, some of the government debt, some of the things which, you will need to be cleared out before you go on to any of the commercial side of it.
Yeah. And I think there's always scope to look at the assets you have as well, right? Like we've
Correct.
seen even very traditional industries like the hospitality industry pivoting and adapting to accommodate the current environment. So, for example, there are hotels now that are offering paid support for distance learning, where you can go with your children, you pay a fixed fee for the day, the hotel staff are on hand to support with distance learning, you get a quiet working environment, and then there's access to the hotel facilities as well. So even within very traditional industries, if you have things in your hand, you can potentially do something with them.
Correct.
Sanjay, from a risk lens, what does a well-prepared business look like today versus 12 to 18 months ago? And coming out of this crisis, assuming that, again, we're all aiming to come out stronger and better than we were before, what are some of the things that companies should be thinking about in terms of insurance and risk mitigation more broadly?
Well, majority of customers or more SMEs primarily focus on material damage, which is physical damage to their assets, their inventory, and so on and so forth. One of the key things that they don't do is insure their debtors. So credit insurance is one of the key things that must be looked at. It would have been super useful during this difficult time, and it is available, and it's always been available. But mostly everybody only thinks about the physical assets. And that's one of the key things that we have to go through. Even the number of inquiries that we're receiving for political violence, they're still worried about material damage. They still are not looking or considering credit insurance, which is something they would really, really need. at the present moment.
And what about things like technical risks? You know, we've seen a couple of data centers go offline in the last 5 to 6 weeks. People have lost access to data, to production environments, etc. Are there ways to insure against this, or do you need your own kind of technical disaster recovery mechanisms in place?
Well, your first line of defense is your own disaster recovery plan. You can insure for these, but they are, let's say, only available to large corporations. It's too cost prohibitive for SMEs.
Okay, we've got one more. We'll stay on insurance for a minute. Got a couple more questions in the chat. What are the limitations of traditional insurance in covering systemic risks, such as pandemics or geopolitical disruption? I know we touched on it a little earlier, but if you can revisit it, that would be great.
Well, unfortunately, systemic risks are also typically, I mean, if you also remember, pandemic was a standard exclusion. And there's an example that's raised. Wimbledon bought pandemic insurance for 25 years nonstop. And they were almost the only one who were covered when their event was canceled during COVID. So in most cases, like again, it still runs on the same principle, losses of few paid by many. The second it becomes losses of many paid by many, the whole system collapses. So there's no insurer who can afford to do it, which is why these are usually systemic risks are usually standard exclusions.
Okay. We're going to come now, because we've kind of covered our three main buckets, to a little bit more audience Q&A. And then in the next couple of minutes, because we're wrapping up at 6 p.m. GST, we can touch on, I'll ask you all to give a final thought on things that founders can do. For now, Saurabh, another question from Harish. What happens if some SMEs are not able to pay bank loans due to their own, I guess, inflow issues? Are there any policies, bank specific or otherwise, which cover loan defaults?
Sanjay, you would want to take that question if there are any insurance policies available to cover bank defaults.
Sanjay, you're on
seem
mute.
to be me.
So sorry, just to understand, are you talking about a default of a bank?
No, a default of a loan.
Loan default.
A loan default.
Yeah.
Sorry, I missed that question. My son was disturbing me while you guys were talking. So can you just tell me that again?
I'll repeat the question. So if for whatever reason SMEs are not able to pay bank loans due to cash flow issues, are there any insurance policies that cover loan defaults? And Saurabh, in the context of banks also, does, for example, Wio have any new policies that it has introduced around loan defaults to support companies through the current crisis?
Okay, so sorry, can I go ahead? I'll just tell you.
Yeah, please. Go ahead.
The credit insurance policy covers loss of your debt that is owed to you as a business, not the debt that you owe to the bank. So those are two completely different things. So it covers the invoices that you have raised to your customers and you have not been paid. Right? That's the principle of credit insurance for a business.
Great. And then Saurabh, for any loans that are owed to the bank, what are the options for SMEs who are experiencing cash flow issues?
You need to approach the bank. You need to approach your relationship manager. You need to approach, if the bank does not offer a relationship manager, call up their call center, visit the branch if they are not, if they're conventional bank, if they're a digital bank like us, reach out to us through a chat or call center. And we will have a chat, and we do have people who have been empowered with discussing these situations and coming up with some sort of a runway for repayment.
Okay.
So Wio Bank has, and my friends tell me in other banks also they have worked something out. So reach out to your banks. That's the best thing you can do. But at the same time, do not approach them with just a simple, please give me a deferral. I am having cash flow issues. Go with some paperwork around what are the cash flow issues, what was your repayment period earlier with certain counterparties, what it is now, who are those counterparties, when are you expected to receive those funds, those kind of things. And that will really showcase that yes, you are well prepared, everything is well documented, and basically you have your things in control, and that will improve your chances to get a much better deal out of the bank.
Great. We're getting an onslaught of questions now. I think people are realizing that time's about to run out. In case we don't manage to get to all of these, and I can tell you categorically we will not, we can make a note of them and maybe provide some kind of collective responses at a later date. Abby, I'm going to come to you because there are a number of different questions around contracts. What are some of the biggest mistakes that companies make in terms of gaps and exclusions that, or not defined exclusions, accidental exclusions that later become major risks? If you can maybe highlight the top 2 or 3.
I think, Sophie, the biggest challenge that most companies use is that certainly the SMEs and the startups is that they tend to use boilerplate contracts. And in the boilerplate contract, I think most of them think it is just to tick the box and complete and go and move forward with that. I think it is they need to invest into it. Say, what are the things that are most important to me? And the biggest mistake that I see is that I think where there is an obligation which is positively stated in the contract, the contract does not address expressly what happens if that contractual obligation is not fulfilled. Well, people say, I'll pay you in 30 days. They say, well, no, it said it's written 30 days. But what happens if you don't get paid in 30 days? What happens, if you do not do? So that what if question, I think, can clarify a lot in their own thinking process, which got to be addressed in the contract. And the absence of that consequential question in terms of that, it leads to uncertainty in contract. And then people tend to think, well, now I can't do anything about it. Again, that is the best way I can answer to that question is invest a little bit, ask your counsel, what happens if, and if that is important to you, how can we protect it?
I mean, even basic things like definitions of the parties of certain standard terms within the contract, because when you're trying to get a contract over the line, these things seem unimportant. But when you're then trying to dispute it, and if you haven't properly defined the parties, or if you refer to parties as different things throughout the contract, then that contract can become unenforceable. And even, things that seem totally nonsensical or kind of meaningless upfront can become really critical at a point of enforcement. I've got another question for you from Waleed. In cross-border commercial dealings, what is one contractual clause or legal safeguard that experienced businesses always include, but entrepreneurs sometimes?
I answered that question actually on the chat. I think, to be in cross-border transaction, I think you got to be very careful in terms of what is the governing law and what is your dispute resolution mechanism. And you got to think about it, where is the default likely to happen and who is likely to enforce it? Does it work in my advantage or it actually works in other side's advantage? Because if you are dealing with the counterparty that is not in UAE, still resorting to the UAE law or the contract or dispute resolution, it may not actually work to your advantage.
Yeah,
but
it's
more,
got to be
yeah, I think more important I would suggest is that in a contract, you try including provisions of continuing to having good faith discussions, which certainly helps in situations like these where there is at least, it may not be the strongest possibly worded clause, but there is an obligation to have discussions in good faith to see how you can help each other.
And actually, there's a related question to that, which is how do startups legally protect themselves when dealing with overseas suppliers they don't fully trust? I mean, the short and slightly flippant answer to that question would be don't go into business with suppliers you don't fully trust. But assuming that some companies don't have that option, or they don't have the option to travel abroad to meet the suppliers in person and establish a trust-based relationship, how can you protect yourself in I guess contractual arrangements where you are several degrees removed from the third party?
I think in that situation, you got to either mitigate your risk by getting more upfront deposit. I think you need to probably get some sort of a certainty either through some letters of credit. And I think what Sanjay earlier was mentioning is that the credit insurance and that really helps. And what happens if there is a payment default? I think they got to use insurance as a tool to mitigate those risks. I think law is not necessarily the answer to that. It may not be the most effective clause because I think the cost of enforcement, particularly cross-border where you don't know the party, could be very high. When you compare that to the cost of getting an insurance where you actually know and you have a relationship, it may be more cost effective.
Yeah, so I think we're going to start wrapping up now. We'll make a note of some of these questions for later. In terms of key takeaways, my key takeaway from this discussion, by the way, is that risk mitigation is a multifaceted thought process. You have in your panelists a financial, legal, and insurance perspective. And when you are mitigating risk as a company, you need to be thinking about it from all of these perspectives. As Abhi said, sometimes the law is not enough. Sometimes you have to insure against risk. Sanjay, maybe we'll start with you. If you had to propose to the founders in the room one thing they should do in the next 30 days to protect their business, what would it be?
Next 30 days, credit insurance. Literally, that's the only asset that you need to cover. Again, it protects your cash flow. It also enables you to get better facilities from your current bank. Those are the two key advantages that you get out of it. The other major thing that you also get is market intelligence. So if there's an online application, if you have to apply for a debtor, for a customer, the customer is either approved or disapproved. Now, when they're disapproved, you know that you shouldn't be doing business with them. Or you may ask for 100,000, they may only give you 50,000. So there's a reason why the credit insurer is giving a lower limit for this particular customer. So it gives you market intelligence. If this customer has defaulted to some other supplier, the insurer will let you know that he's defaulted somewhere else, reduce your business with this particular buyer. So it's a lot more that comes out of it other than just simply protecting your outstandings.
Great. Thank you, Sanjay. So credit insurance from you. Abhi, same question.
From a legal perspective, my response to this question would be that in the next 30 days, first thing I would say is do not panic. I think most situations resolve by themselves. And where you are dealing with counterparty or a default, read the contract calmly and think about it in a pragmatic business fashion. And do not be afraid to have discussions, even if it is difficult with people. There is no substitute to discussion. And those discussions often are, resolve things and lead to results that you may not otherwise expect.
Thanks, Abhi. Keep communication channels open and don't panic. Saurabh, you get the last of the panelists says. Same question. One thing every founder in this room should do in the next 30 days to protect their business.
Actually, I love the answer which Abhi gave. Conversation is very crucial to everything. Have conversations, one, it will lower the anxiety of the current situation. But being resilient is not about predicting, because nobody can predict what will happen next or which side of bed the leaders will wake up from. Yeah. So only thing which you have in your control is to predict your numbers, to be honest with your cash flows. So as I mentioned earlier, be honest with your forecasted cash flows. Start having conversations with your lenders, your counterparties, both on receivable side and payable side. If necessary, have a chat with your lawyer, your insurers, and then you will come out stronger than ever before. I mean, this is something which we have seen in UAE in the past many times, similar sort of crisis situation. But whoever has been here has come out a lot more stronger. The country as such has come out to be a lot stronger. So I'm sure the same will be the case this time. And all of us along with the city will prosper more.
Inshallah. So some excellent advice there. Credit insurance, keep communication channels open, don't panic, be honest with yourself and protect your cash flows. Before we finish, I have been asked by Cicely to request, please, that you complete a poll which covers session feedback, if it was helpful, and what you need as a founder in terms of support, additional knowledge sharing, etc., with future events. The poll should be up on your screen in front of you. Host and panelists cannot vote. That's a shame. Yeah, exactly. Not fair. Super. Thank you again all for taking the time out of your evenings. Perhaps it was a much needed break from distance learning and supporting distance learning for some of you. We will get through this. We will come out stronger. We live in an amazing country with fantastic, very emotionally intelligent and generally intelligent leadership. And I think we've all been able to see that over the past weeks and months. So stay strong, keep communicating, and we'll see you at the next Thai session.
Thank you. Thank you.
Thank you very much. Good night.
Thank you.
Thank you. Good night.
Good night.
Thank you so much, everyone. Bye-bye.
Thank you, Saurabh. Thank you.